Wall Street Willie. My friend Daniel asked me about a mortgage, but what is a mortgage anyway?
Well, a mortgage is a loan that you take to buy a home.
Well, can I get more money in the mortgage than what the home's actually worth? So, like, if my home is worth $100,000, can I get a mortgage for $200,000?
No, you usually take a mortgage for 80% of the home's value, and the other 20% of the home's value is your down payment.
What is a down payment?
Banks always take a down payment for the mortgage because they just want to be safe and make sure you can pay at least that much money at one time, which means that usually you'll be able to pay the rest of the mortgage. So if you were taking a mortgage for a $100,000 home, you would take a mortgage for approximately $80,000, and then you would make a down payment of $20,000.
Well, can I buy a home if I don't have a whole 20% down payment?
Yes, you can. There are special mortgages like an FHA mortgage that allow you to pay less than 20% down payment. But that's a topic for a separate video.
Well, how was the mortgage amount even decided?
The mortgage amount is decided by your income, other payments that you have like student loans or car payments, your credit score, and the value of the property that you're taking a mortgage on. And also, it can be decided based upon how much money you put up as down payment.
Well, how long do I have to pay the mortgage for?
You usually have to pay the mortgage for between 10 and 30 years, but the most common term for a mortgage is 30 years.
30 years? That's a long time. Well, how frequently do I pay the mortgage? Like, do I pay it once every year or once every day? Or do I pay everything at once?
No, you pay the mortgage amount slowly every month.
How much do I have to pay every month?
The amount that you pay every month depends on the mortgage amount, how long the mortgage is for, and the interest rate.
Well, what happens if I can't make a monthly payment?
Then the bank will give you a couple of months to catch up on your payments, but if you cannot still catch up on your payments even after a couple of months, the bank will make a foreclosure, which means that the bank will take possession of your home and sell your home to get its money back.
Well, what happens after I finish all of the payments?
Then the bank has no claim on the home, and the home is 100% yours. And you also will not have to keep paying the bank every month.
Yay! Anyway, are banks the only ones who can provide a mortgage?
No, there are many other financial institutions that can. For example, credit unions can also give a mortgage.
Well, I'm interested in learning about the interest rate on a mortgage. Is there anything else you can tell me about it?
There are two kinds of interest. The first is fixed interest, and the second is floating interest. But that's a topic for another time.
Thank you very much for telling me about a mortgage, Wall Street Willie.
You're welcome, Super Cooper.
Remember, finance is your friend. Hey, people, if you enjoyed this video or learned something new, please like, share, and subscribe for more easy piece of finance.